Hello everyone and welcome to my morning report channel analysis videos on Wednesday 18th of July with me, Richard Perry, market analyst at Hantec Markets. We've got dollar strength that is filtering through these markets, and this is really playing out in quite a strong way. This has come on the back of renewed optimism really about the US dollar in the wake of Jerome Powell's Fed congressional testimony yesterday. He was pretty upbeat about the economy, suggesting that there was no real concern yet about the trade tariffs, and gradual rate hikes were needed, and the sort of monetary policy tightening was pretty much on path. So it was certainly a good day for the dollar yesterday, and we've seen that that's continued into today. We've got euro dollar down another sort of 0.4%. Sterling has accelerated its weakness today. You've had UK inflation that was weaker than expected, and that came as at 9:30, and that sterling took a 50 pip leg lower on the back of that instantly, pretty much. Missing on both headline to 2.4%, which is in line with last month, but lower than 2.6% expected, and core as well down to 1.9%. Really sort of showing that sterling, or showing that Europe, UK inflation is still sort of tracking lower, isn't it? Look at that core number there, back below 2%. Anyway, so that has helped to drive sterling lower, and that's actually now broken on cable down to lows not seen since October last year. So really strong moves to the downside, and that is continuing today. Equity markets remain positive. We had a decent jump higher on S&P 500 last night. That's broken out to its highest level since February, and it really is sort of continuing the run higher, which is positive, and that's sort of reflected through the European markets today, where you've got DAX outperforming, but also FTSE and CAC still strong as well. The gold price again is the big mover on the day. I'm going to talk about that in the charts, but the big sort of technical breakdown that we've seen on the gold chart below 1236, that is a huge breakdown, and really outlook changing. But also we're seeing weakness on the oil price, which had the API inventories yesterday that came in with a surprise inventory build actually, and that has continued to pull the oil price lower. So what about for the rest of the day? Well, you've got European or Eurozone inflation, which is that is the final Eurozone inflation for June. No expectation of a change on headline, which is 2%, or core, which is 1%. That was the flash reading, so no changes there expected. And then into the afternoon, we've got building permits and housing starts. Very little sort of real change there expected. I can't imagine that's going to change the direction of the dollar too much. And then the oil price will be reactive to the EIA inventories. As I said yesterday, we had the API inventory build, so EIA will be interesting today, whether that can have a drawdown, but also look at the distillates and gasoline as well. So that takes me to my chart of the day, which is Euro Swissy. Euro Swissy has been in this improving trend over the past 6-8 weeks, and broke out above this 1660 level of resistance. That was the June high, and then subsequently July resistance coming in, and then we broke out above that last week with a strong bull candle. We've just retreated back into it, and I'm sort of thinking that this is now an opportunity to probably look for a buying opportunity again, where you've got this sort of support that comes in at 1615 area, the support that comes in, or the underlying demand that you'll get from the breakout above 1660. So sort of between 1615 and 1660, you've got this nice little sort of buy zone, and that comes in within the uptrend, and also the now rising 21-day moving average as well. So yeah, it's this little retreat. If you start to see it forming support, I think it could well be a little opportunity for a buying chance again. We've got the momentum indicators, which certainly looked good with the strong breakout. RSI still above 50, just retreating back a little bit. The MACD line is just sort of sort of losing a little bit of impetus, but the one main caveat you would have is this sort of moving negative signal on the stochastics, and certainly how the market reacts to this band of support I think will be important now for the near-term outlook, because I think the bulls would certainly want to be starting to look for their opportunity again, and if you see that support at 16.15 broken, then you may well see that this uptrend comes under pressure. But for now I'm looking at this as a little sort of unwinding move that is a chance to buy, but you just need to wait for the buy signals before sort of jumping in. So here's the hourly chart. You got initial support from yesterday's low 1640, and as I said 1615 is the main sort of line of support that comes in. So how this market reacts in this buy zone area now will be key. So I wish you good luck in trading. I'll speak to you later.